Welcome to What CEOs Talk About. Do you wonder what CEOs talk about behind closed doors? How they bring their vision to reality? How do they overcome and succeed through adversity? We share that and so much more with each episode. Now, let's get started with the show.
Hello, everybody. My name is Martin Hunter. I am the host of What CEOs Talk About, where we translate vision into frontline operations. Today, we're talking about economics, VCs, private equities, and all that good stuff with Abhishek. Thank you very much for being on the show.
Pleasure. Looking forward to this. Martin.
Thank you. Abhishek, can you give us your full name? What do you do for your living?
Sure. My full name is Abhishek Garg, and currently I am part of the private markets ecosystem, where I work with a lot of stakeholders in this ecosystem, namely the VCs and private equity firms. And as part of my current work, I support them in their journey of being smarter, better in whatever they do as part of their business operations. I can share a lot more details as we move forward in this conversation.
Absolutely. What is the title of the show for today, Abhishek?
VCs as a CEO.
Perfect. We'll discover that and we'll go a little bit more into detail. Well, a lot more into detail. Abhishek, can you, for the benefit of the audience, can you tell us your journey? Where are you from? And then kind of where'd you grow up? How'd you grow up? You know, where'd you go to school and all that stuff and that, your journey that takes you up to Capital Net as of today.
Absolutely. So I come from India and a very small city in India called Hyderabad. I was born there, end up being an engineer by qualification. But while qualified engineer, the heart always belonged in business and things around business. So moved out of engineering and then ended up doing my MBA in marketing and MIS, and then realized that I have a lot more to learn about how business works in this global ecosystem. And then ended up being part of a corporate organization, one of the big fours called Deloitte. Spent almost a decade plus over there in multiple roles, multiple teams across supporting multiple geographies in my stint, and then realized that there is more to life than working at a corporate. However well you get paid and however great the job is, and then started looking at opportunities which can challenge me as a professional, and that's where I came across some very interesting stuff happening in the private markets ecosystem, largely by the startups, and how they look at problems and convert those problems into opportunities and those opportunities into ideas, business models, and make money out of it, right? So that's been my journey so far in the last 17 odd years in a nutshell. And yeah, always look forward to working with smarter and better people than me.
And so what does your current company do?
Sure. So CapitalNet is a technology subscription SaaS provider, which has solutions which are used by the private markets ecosystem stakeholders. And there are three sets of stakeholders we focus on. The first set are the institutional investors, starting as early as an angel network, a micro VC, a VC fund, or a corporate fund, all the way to a private equity, right? The second set of enterprise stakeholders we collaborate with are the likes of incubators and accelerators. And the third set are the startup founders and entrepreneurs who are actually making the impact or creating those unicorns, which we hear day in, day out of late, right? Why are we doing what we are doing right now? We realize that this ecosystem needs a couple of things. One is a dedicated tech stack between these three stakeholders to enhance their level of collaboration, communication, which is currently not there. A lot of these stakeholders, even today, work in silos, while some of the VC funds deploy millions and billions of dollars into technology transformation. Their own private markets ecosystem needs that support. And that's where we come into play.
for the benefit of the listener, because I don't think there's a lot of people who are as educated as most people, and I'm sure that people don't understand the difference between what's a VC, what's a PE, what's a family office. So could you, in simple terms, kind of go through angel investors, venture capitalists, private equity, and family offices?
Sure. So now I'm on your podcast, Martin, and you and I are a friend now.
Mm-hmm.
So collectively, we tomorrow go and we start investing in our individual capacities as angels on a startup. It's as simple as that. That's angel investing, where friends and families, people you know, or people you are introduced to, um, like your idea, like
Mm-hmm.
what you are doing. You're too early stage as a company. You're still putting your head around your idea. How do you want to create a product around it? And that's where they will come and support you with the initial investment.
Mm-hmm.
So that's the angel investing, which happens a lot and is happening all over the world in bits and pockets, right?
Mm-hmm.
Now, once a company raises some level of angel investing, they have some money, they are working on their idea, they can start seeing some level of early anchor users, if we can
Traction,
call
yeah,
that
they're
so,
good, yeah.
traction, yeah. Then they can probably, for looking at growth, looking at making the product more robust, they can go for a venture cap round. And this is where they normally reach out to an institutional investor, which is a VC, whose life is no easy or complex in its own way, right?
Mm-hmm.
Because they are working on multiple dimensions. It's not their own money. They have raised money from somebody else.
Mm-hmm.
They are the custodian of that money, and they are using that money to deploy on a company who can use that money for whatever purposes they need for growth, for product enhancement, or whatever
Mm-hmm.
the case be. And in the same journey, if the company continues to be successful in what they are doing, they end up graduating to a bigger round of funding where they need global growth, or they need to start getting ready for listing on an IPO or stock market. That's where the PE firms come into play, and they can start helping them with that, or get acquired, or get merged, look for a merger or something like that. So those are some of the liquidation events they can look at as they start graduating in the company. So it starts as small as an angel investor, and it can go as matured as a private equity firm.
So it's not necessarily the size of the check. It's really about the journey within the business that determines who you're going to deal with.
It's absolutely a function of the two. You're right.
Okay. And then in regards to time commitment, I guess an angel investor, you just have to smile, look pretty, wave, and go, hey, put your hand out and go, hey, can you give me some money? That would be the definition of the transaction with so not a lot of due diligence, not a lot of homework. It's really how can you sell your idea to this individual to give you some money. So that's number one. I can explain that one. How about a VC? What's the level of commitment from both parties in regards to the transaction of handing over a check from the VC, the venture capitalist, to the company?
So for me to answer that question, probably I'll set up some more context how a VC fund runs,
Mm-hmm.
right? So as a VC, as a fund manager or the general partner of a fund, um, it's a very unique business model, and the uniqueness over here is that as a fund manager, they end up managing two different funnels, right?
Mm-hmm.
The first funnel which they manage is of prospective investors, or called as limited
Mm-hmm.
partners in their terminology, where they need to reach out to them and take their confidence, their trust, build a rapport with them so that they can invest in the fund and the thesis of the fund by which they wish to look at the investment. At the same time, they need to manage the second funnel, which is go after the right kind of startup founders and convince them to also take money. I know I'm saying that convince to take the money, but a lot of people will say, Abhishek, it's not the case. A lot of founders chase fund managers the other way around, right? But believe me, if you are looking from a GP's perspective, they're always looking for those dark horses
Mm-hmm.
where they really want to deploy their money, as long as they find those dark horses in their own sets,
Mm-hmm.
right? So it's a difficult extremes they are handling at any point of time between the two funnels. And to make it more complex, it's one of the most compliant business in the world. There are so many compliances based on the jurisdiction you are structured in as an organization. You could be here in the US, you could be any part of the world. There are quarterly returns you need to file. You need to always have a bookkeeping around you. You need to always take legal services as part of your operation. So there's a lot of complexity around in the process, and there are no guaranteed returns, right? Uh, while they promise their investors a certain level of returns they could end up getting, but we all know it's a very risky capital which they are working with, and so these are so many moving pieces. I don't know how some of these VC fund managers even sleep at night with so much of things running around them, right? So yeah, that's the complexity. But what makes it interesting is two parts, Martin, based on my understanding and talking to a lot of people, is there is the science part, and then there is the art part of the
Mm-hmm.
business, right? And I have seen some of the fund managers or GPs who have been able to strike a good balance between these two to get the desired results they achieve. And some of them either learn it from senior peers in the industry, or some of them learn it the hard way by making those mistakes.
It kind of, I want to unpack that a little bit, what you just said, because there's two critical components, but that kind of takes us to where the title of the show is, this episode for today is really, not just a fund manager. You're leading, you're that CEO that needs to build relationships, that need to oversee moving parts. I mean, the due diligence part, what people don't realize is that AML, anti-money laundering, is a big component of it, or of the compliance. Is that because there's been so many people who have been basically laundering money and washing money from one jurisdiction to another, one country to another. That is one of the reasons why we've got a lot of compliance around that. The second thing is the art form versus the practical mathematics of success. Like any other business, you have a success ratio that is dictated by pure statistics. And I think there's a lot
Mm.
of VCs or investors, private equity, use kind of the same methodology as well. But really about, what if I take 100 companies within this industry and give them each $1 million, 20% of those will, return the $1 million, and then 10% of that will return. So they play a numbers game. But I think the critical part, the art form of it, that where we come in very frequently, is, a lot of VCs ask us, they go, hey, listen, that the number one question that we get is, hey, what about the management team? Right? What about the management team? What about the management team? What about the management team? And you're like, okay, well, there's something, over the years we've realized that that's the key thing is, they trust the idea, but they don't necessarily trust the management team to take that business to the next level. And that's where we make a lot of impact, is really coming in as a SWAT team to be able to do that. So I think what Abhishek is really saying about understanding the balance between a numbers game, but also the art form of leadership, of building, of recognizing talent, of not being just a mathematician. And I think what Abhishek is saying is that there's some VCs that are really good at math, but really horrible on the people side. And there are some VCs who are really, really good on the people side, but not necessarily good on. And so I'm explaining kind of the context of the title. So
Yes, absolutely right. Yeah.
so what do you see, because you've been exposed and you are exposed to all of these things? What's the biggest trend that you're currently seeing when it comes time to, realizing to become from a fund manager to really understanding to become the best, or the CEO of funds?
Yeah. What I have seen of late is that a lot of professionals are looking at becoming a fund manager, right? And in the prior avatar, they would have either worked at a bigger firm or a fund where they would have understood these two aspects and uh, institutionalize
Mm-hmm.
them within themselves, and now they are trying to come over, or they are successful entrepreneurs in their own rights,
Mm-hmm.
and they believe now this is their way of giving back to the ecosystem by contributing to the capital. So there are multiple ways one can end up being a fund manager. I think a lot of people still need to understand that the underlining thing which cuts across this is having a growth mindset.
Mm-hmm.
And from my aspect, um, once you start getting into this game, there are a few things which are needed from a growth mindset perspective, which I think I have seen and observed people having. One is they are always looking at problems as opportunities,
Mm-hmm.
right? Whether it's coming from business operations, it's coming from a founding team, it's coming from a startup, they always see them as opportunities where they can make some money, or they can make or create an impact around that particular place. That's one.
The
Two.
before you go into two, I think that there's a lot
Mhm.
of managers, fund managers out there that have a problem for each solutions. So I've reversed that is because there's often at times you go, well, let's think about that. Well, no, we can't do that because of this. Oh, well, what about this? Well, we can't do that because of that. And I feel that when they get attached too much to the number, you get that kind of, hey, oh, there's always a problem for each solution. So that's something that I really listen to is the excuses of why something is not performing, right?
Yeah, yeah. No, I agree. I'm with you on that. So the second thing is that I have seen a lot of these fund managers, Martin, they have a very high level of conviction about what they are getting into, or sometimes they articulate that in form of a fund thesis as well,
Mhm.
right? That they believe that what they are going into or going after or collaborating with uh, would lead to creating that impact which they are
Mhm.
looking at. Does it happen every time? Not sure, but that conviction rate is very very high in these kind of people. The third element is, and this is where I see some fund managers distinctly different from the others, and I will
Mhm.
use a South African proverb here, which says, "Go faster, alone, go alone. Go
Mhm.
together, you go further." Right?
Mhm.
So there is a lot of um, fund managers who believe in going alone,
Mhm.
but there are a lot of successful ones who believe in the possible art of teamwork.
Mhm.
Is it noisier? Is it dirtier sometimes? We all know how it works,
Mhm.
right? But yes, I mean that the benefit and the results can be seen by themselves.
The it's funny because as soon as you introduce a couple of people and you have a position of authority, if you are a professional, and so let me for all the professionals out there, regardless of your profession, you tend to be a lone wolf, right? You tend to be somebody who may work as a group, but not often is there's cooperation, not necessarily as much collaboration, if you want to call it that, right? So at the hospital, there might be a lot of doctors that are working in the same facility, but they're not necessarily working, collaborating on everything. Again, I'm generalizing. So for all my professional friends, sorry for putting you in a bucket, but hey, that's your mindset. That's your MO. Um, when we talk about business, especially in acquisitions, M&As, they tend to say, well, here you go. I've bought you, I've given you the money, and they don't invest the time to coach and mentor and the art form of really following a process of growing a company. And what they tend to forget, because listen very carefully what Abhishek said, it's like you have to have a growth mindset. And when a lot of people associate growth mindset is growing your sales. Okay, great, but you need to grow the company too. If you need to grow the company, you need to hire people. So you need to have a solid hiring process. You need to have a solid performance management process. You need to have a strong leadership process, a strong quality. Oh my goodness, that's all operational. So they think that because they understand governance, they understand operations. And professionals are the furthest away removed from having an operational mindset. Don't get me wrong, there are some great people, but what you're educated in school is follow the process in regards to, tick this box, tick this box. You're not instructed or educated to deal with the day-to-day push and pull of what Abhishek called a dirty job, right? Your sleeves are rolled up, you're an operator, you're wearing coveralls, you got to get into the thick of things, and that's solving human problems in a very financial world. Sorry, I just kind of got onto my soapbox there for a second.
Absolutely. No, no, I think that reminds me of a small scenario which I had come across very recently, and one of my stakeholders asked, you know what, I want a certain kind of reporting or dashboard from the data which I have, right? And I understand, right? There are business reports, there are operational reports, there are dashboards and stuff. But until a user doesn't know what they want to do out of the data or the decisions they want to take out of the data, you can give them the most classic looking reports, you can give them the most classic looking numbers. It won't take them anywhere forward. So you should know how to derive insights and take decisions out of it. And that can only happen with experience, with you understanding the ground realities at an operation level. That cannot be happening otherwise. I mean, that's at least my experience says so far working with so many stakeholders globally.
It's hilarious how when you're an accountant and you look at a P&L sheet, and so the accountant will tell you, here's where you're losing money, here's where you're gaining money, do more of gaining, do more or less of losing. When an operator looks at it, he goes, okay, where are we investing and where can we save time? Is this what you see as an operator is the actions behind the numbers, where there's very few. And we have one, Wade Atherton, who works with us as Urjo, is an accountant, but he's got this great ability to be able to see the numbers and look at the actions behind it and dive down deep into the, looking at a P&L or balance sheet and goes, oh, wow, we're struggling with retention. I was like, how'd you see that, Wade? And he says, well, look at the correlation between this number, that number, and this number. And I'm like, oh, shit. Well done, right? And then he pulls that information and gives it to the operator, gives it to Kevin, who's our CEO, and says, hey, listen, this company, if we want to bring it into our portfolio, we're going to have to increase a lot of the accountability because the leadership accountability because we have so much turnover. And you're like, oh shit, yeah, look at that. And so I think there's too little people, especially in the funds manager, that are capable of seeing operational issues from the company's economics, in my opinion.
Absolutely, it could be the case because what they are currently busy is looking at other areas of the business which are more critical to them than going into a portfolio company and looking at what are their operational drivers or laggards which they need to focus on and help them with that. Sometimes the portfolio company are forthcoming and raising the flag and saying, I need help over here. And that makes life a lot more easy, which is very seldom, I believe, because people don't want to be seen in a very wrong light these days, right? But if they can do that, I believe it saves a lot of time, effort, and you don't have to do course corrections down the line. I mean, you can be more agile in terms of how you are looking at addressing your target market. But you're right. Just to conclude this part of the growth mindset, one more thing which I see a lot of VCs, and I will take another analogy over here, Martin, is that it's the wartime CEO versus the peacetime CEO, right? You would have heard about this. It's a very old thought. A lot of people have written about it. They have shared their views around it. And I wanted to draw an analogy with that with the fund managers, right? You can see that in a single day, they are playing both the hats. They are a wartime CEO sometimes. They are a peacetime CEO, and it's very difficult to juggle those hats in a moment, right? Classic example, Larry Page. If you see, he was more of a wartime CEO, right? he really had to grow. Steve Jobs, wartime CEO, he didn't have the luxury. They were always very protective about their business, the way market is looking at them, the way the competitors are looking at them. At the same time, the precedents who followed these companies as successful CEOs,
Mm-hmm.
they were the peacetime one. They had an option of being more creative, more expansive. They had a bit of traction, a track record built in to which they could take
Mm-hmm.
it further, right? So these scenarios play in, day out in a life of a VC fund manager where they are trying to play these hats, and it's not
Mm-hmm.
very easy. It looks easy, but it's again the art which comes into handy if they have with them.
We tend to look at it in quarters. We always at Urgio, even for ourselves, we apply and say, okay, are we in an aggressive state or defensive state? Are we on the attack or are we the defense? And we do it on a quarterly basis. And so we're okay. This quarter for us is more an aggressive one. We're really kind of wartime aspect of gain as much momentum, gain as much terrain, gain as much, so that we tend to go kind of cyclical, wartime, then peacetime, wartime, then peacetime. So we kind of go cyclical in that. And that's what we encourage a lot of. There's too many times. I mean, one CPG plant based company that we worked with, the wartime was like, okay, go, go, go. The market is hot for CPG, for plant based. And now, everything has gone down. And when the opportunity was there, the inability of the fund manager to really recognize the opportunity as a whole, was a bit of their downfall. So it was disappointing to see that the decision was not made to sell because they thought, oh, there's so much more. There's so much more. Well, hold on a second. Is the market going to stay forever? Anyways, long story short, to Abhishek's comment, they didn't know which wartime or peacetime to really pick on a regular basis. It was just go, 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 explosive growth all the time. And that's not prosperous. There's no what I want to close out with on this one is that often at times companies, VCs, are looking to invest for a transformation. They're looking for their investment to transform. And if you're transactional, well, you think, well, I'm going to put $100 in and I'm going to expect $200 out. Well, what are you doing to transform the machine to give you money? If it's a spending money, how many times have, Abhishek, you've probably been exposed to a lot of investment where the CEO just burns through the money. Their burn rate is crazy and say, well, give me more money. Well, the behaviors that you have are not transformational. You are not a frugal individual. So the people that actually ask for help are the people that understand the value of their capacity and capability and go, I'm not capable or I don't have the capacity to do that. Please help me. And I think those are the investments that you should never go, oh, I'm going through, I'm spending a whole bunch of money, blah, blah, blah. And then you throw money at it and go, hey, you're out of money in 9 months. Well, you didn't. Did you ask or did you encourage a transformational behavior within the organization? So Abhishek, tell us what is the most beautiful trend that you are seeing right now in the investment world? What is so rosy? You're like, oh, I'm getting faith back in humanity because this is happening.
So there are few trends which are playing globally, Martin. One, companies are staying private longer. So instead of 5 to 7 years of a company from idea to IPO, it's now become
Nice.
7 to 10 years. Number one. Number two, there are a lot more accredited investors who are coming on board who want to be LPs or investors in a fund globally. And that number is increasing because people have realized that other asset classes like gold, real estate is not giving the kind of returns they are expecting. So they want to look at that. And while they can go to a stock market, But the interesting fact over in a stock market is that there are around 60
Hmm.
stock markets globally today. And in the last 20 odd years, the number of companies listed in the stock market have declined by
Hmm.
10 to 15%. And that could be a function of mergers and acquisition, that could be a function of multiple other areas, right? The compliance being stricter, the cost of capital being higher. What does that mean? That there are people interested in putting money in private markets. There is supply of companies in the private markets, and in the future, if forecasts are to be believed, in the next 10 odd years, it will overshadow the public markets in terms of the amount of assets
Hmm.
under management it will be holding or managing globally. Now, that's where I get up every day and I realize that there is so much potential happening, so much of work happening in pockets globally, right? Innovation is no more
Hmm.
limited to Silicon Valley. It's happening all over the world. Uh, Investments are all over the world. If I had to start a startup 10 years, 15 years back, I need
Hmm.
to have access to capital. And for that, probably I'll have to come
Hmm.
to the Bay Area and do my fundraise. Today, I can do my
That's
fundraise
true.
sitting anywhere in the world. It doesn't matter, right? So these are some very amazing trends. And adding to all this are
Hmm.
the Gen Zs. And the reason I'm calling them out is because I can see a lot of Gen Z stakeholders or people looking at being a fund manager or being in the investment business going forward. Their drivers are different from millennials and other demographics, and it's interesting to see that while the market will grow, there will be more stakeholders, more fund managers who will be involved in this fine art of
Hmm.
creating value and nurturing businesses
It's
going forward.
I think the globalization is really in two folds. I believe that public markets are dying because people tend to want to consume more locally as well. And don't I think there's a sense of when something goes public that it is not as it's emotionless, it's cold, it's publicly traded companies have seen too much down and people are savvier investors in my opinion. You know, when we were growing up, you know, my parents they'd say, okay, we'll put the money in the bank account and let it sit there for, and then you had a little bit more investors to say real estate. Now we've got markets, right? Back in the 80s and 90s, the public markets were really there, bigger. And now with all these downfalls, people go, oh, screw that. I'm not like, I mean, in 2008, I lost what, something like $160,000 of my personal money in, 24 hours. Like, what? That's like 4 years worth of work that has just kind of disappeared. And I think because they're more savvy, the other thing I was at a 40s under 40 dinner a couple of months away. And it was amazing to me how these younger CEOs and founders, mostly millennials, I guess, and some Gen Zs, knew more about seeds and M&As and funding and financing than I did in certain cases. What I found enlightening was that what I found disappointing was that they didn't understand the value of having a solid business first. And that was disappointing. Well, I'm third purchase profitable. And how, tell me, how does that work? Like who's paying for the losses for the first two purchases? How does that work? Right. And then there's a couple of other ones. Shout out to VCs, the shoes. They did a really good job of staying private, and I think that what you're saying about staying private for longer, I think people are realizing that they have a more prosperous mindset. And millennials were all about, and I'm generalizing, of course, but it was all about Silicon Valley. Sell, 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 sell. You know, I don't care if you're selling smoke and mirrors. You're going to make a gajillion dollars. Now people are realizing, well, that's not ethical. It's not really working. So how about I just have a good idea, get some money, and investors are seeing that. Hey, listen, there's nothing wrong in having something that is more of a cash cow than a big, payout, in my opinion.
No, I agree, and I think that's
Mm-hmm.
where the excitement is. And while I am in my early 40s, I can see that the next 10, 15, 20 years will largely be transformational globally in this space. And I'm thankful, though not by design, by chance, I am now part of the private markets ecosystem, and I really enjoy spending time with these smarter and sharper people
Hmm.
around me at any point
I'm
in
gonna
time.
jump onto the mic because Abhishek is gonna go on mute because somebody's mowing the lawn in, in his backyard. Uh, so the one thing that is critical in today's market is understanding what you are investing in. And what I mean by that is be realistic in how you come across your investment. Do you want high risk? Do you want low risk? Do you want this? Do you want that? The market is very complex. But when you understand at what place you fit in, don't just give your money blindly to somebody. Just say, here's what I see my money doing. And there's a show that's going to come up with Mark. We're going to be recording in the future here. And the one thing that he always says is, don't view your investments, your whatever you want to invest in as your investment. View it as that is my new car. That is my kid's scholarship. That is so when there's a physical or emotional attachment to that, you're much more appreciative and intentional on how to invest that money. And we're not all angels and VCs and private equity or family offices. But if you have that mindset, I think that's where the Gen Zs come in as well, is that they've lived and seen all of that. And they go, let's be more intentional with our work and our money. I think that's a good generational situation that we're faced with.
Absolutely. I think that's important because we leave the planet better than we got it. So, and that can only happen if people are a little more conscious about their decisions from investment, commercial, or money perspective.
Abhishek, let's flip the coin now. What is dark and jewelry? What is the dark side of what's happening and what do we need to improve on?
So, I think one such area which you already highlighted, Martin, is the anti-money laundering space. And the reason I'm calling it out is because there is a certain intent with which this ecosystem is getting emerged. And while there are people who are being fair, but there are also people who are trying to take advantage of some of the structural and other loopholes which the ecosystem has, which actually should be seen from benefiting the ecosystem rather than using uh, for various other practices. So that's one definite area I see people to focus on. The second is I believe a lot of stakeholders in the ecosystem work in their silos um, because they don't want to collaborate or they prefer competing over collaboration. And I feel that can be changed. It could be again a function of using technology if they think they can have their business rules called out and have rule driven engagement if they require. Because I can see that I'm talking to a lot of incubators as part of my work profile as well. And I can see that a lot of them see startups from other parts of the world who have a better, efficient, cheaper, smarter technology, which can benefit lives over here in North America. And those startups need market landing opportunities over here, right? And those startups don't know how to do that. So that's where collaboration comes into play. They can get an incubator in Far East to work with an incubator here to benefit the startup and create that value collectively. So if they can collaborate, I see a lot more value can be generated for the stakeholders involved in the process.
It amazes me because my boy and I were watching a nature show, and it was about the great apes, and you saw the competitive nature of the chimpanzees versus the collaborative approach to bonobos. And it's amazing, the survival rate, the tension rate, the age, the bonobos, because they collaborate and they work together, both male and female, is absolutely beautiful, and they work really well in the day to day. The chimpanzees, who are very competitive between tribes, is just a live and die situation continuously. I mean, you can take the lions and the hyenas in the same way. So should we not, as elevated creatures, understand the benefit of collaboration, right? That's why I always say, people ask me, I say, what are your competitors doing? I don't know. They're probably doing the same thing as me, you know? And, oh, Martin, I spoke to one of your competitors. Oh, can you introduce me? I said, why would you want to be introduced? Well, what happens if I can help him or her? And why would you want to help him or her? Well, you know, goodness pays in the end of the world. Karma is a good thing, right? So there's ways of, and I think the one thing that we have learned over the years in regards to collaboration is not be everything to everybody and not trying to be hoarding all the stuff. What am I good at? And then pass on anything that you feel is not aligned and say, hey, listen, no, you know, Jimmy, hey, listen, I've got a client, Susie. She's not really my ideal client profile. I could work with her, but I think it would benefit a lot more if she worked with you. Both now Cindy, or whatever, Judy, I called her, she sees me as, oh, a great person. But Jimmy also says, well, you gave me something without asking. And that pays dividends at the end of the day 1,000 times, in my opinion. And the one thing that we always say when we are talking to organizations that are part of roll-ups that we're doing, or mergers, and we all say, you know, through believing in people, we have a greater return. And they go, what? It's the investment is done. The company is run 95% by human beings. You know, we're not completely automated, and even the best SaaS has humans behind it. So by investing in people, you're going to get a bigger return. And then you see the light bulb flick on and you go, oh, I get it now. Yeah. Operations is more about ensuring that there's a quality behind the behavior and the process. And that's an investment that is done on a day-to-day basis that is transformational. So I'm glad to see that. Well, I'm glad to see that you're seeing the opportunity of collaboration. What is the biggest win that you see could happen in the next year or two in the industry? What is very close that you're going to say, this is a game changer. This is going to bring a lot to the industry?
I think a lot more understanding of how value is created. And when I say value is created, it can only be created if value can be nurtured, right? And for nurturing values, you need to nurture the startups. You need to nurture the founders who are there. And that comes at a cost. It comes at multiple factors are involved over there. I see that will be the biggest takeoff for this industry. That somebody told me this very interestingly, that a lot of federal governments invest a lot of money in the startups, in incubators in form of grants, and they say, Abhishek, that's the best way a government can spend and waste its money for the community. And I said, it totally makes sense. I mean, instead of it going in some other bucket, it rather go into innovation and entrepreneurship. Why not?
I agree. A couple of areas that I think we've lost in sports and education. What's the difference between entrepreneurship and school? There's nothing. To entreprendre, to take on, right? Why can we not? And I think that the northern countries are really doing well, where they're changing the educational system into a situational. Okay, you own a pizza shop. What are you going to do? So it's very practical in regards to understanding finance. And now, not everybody needs to be an entrepreneur, but I do believe that the one thing that we do not do well in the world is including economics in the educational process or entrepreneurship. The system now is built to pump out employees. And that's okay. We need employees. Not everybody can be, but we pump out for the corporate world where does the country need more corporations? Maybe, maybe not. I'm not saying that they're evil, but where is it that we need to place the investment is really in the future, and it starts with nurturing and supporting.
Yeah.
What is, Abhishek, what is the reference material of choice? What is the book, the video, the movie, the saying that is by your bedside, on your night table, or in your office, or something that you've written on a sticky note that always stays in your mind?
So, and I'll refer for this to a book which I had read a few years back. And in fact, that kind of made me look at the entrepreneurship space more seriously. It's a biography of an Indian entrepreneur called Rocky Screwwala, and the book title is Dream with My Eyes Open.
Oh, that's beautiful.
Right? It's my all-time favorite read. In fact, I've read that book 2 or 3 times all over, and it's always refreshing to go through the journey of one such entrepreneur and how he did end up being one of the most successful entrepreneurs back in India. That's one book I recommend. And the second book which I recommend is The Art of
Yes.
Ikigai. I'm sure a lot of readers would have read about it. And the 4 circles and the power of getting them together and balancing them is what I believe in. So yeah, that's one thing which I recommend a lot of my team members or stakeholders with whomever I work. I do recommend that.
Ikigai is Japanese for finding your purpose. For those people who don't know what Ikigai is, what are you good at? What can you get paid for? What does the world need? And so the 4 quadrants of that, you kind of pick where you fit and try to really fine tune your life to fit in the middle of really finding your purpose. The one thing that I'd like to close with is that I've been saying this of late is you don't need to make millions or sell your company or become this great super shot company to be able to find your purpose and help people be who they need to be. There is nothing wrong with celebrating hard work. Find your craft, hone your trade, be good at what you are, and be proud of what you do. I think we've lost that over the years where people are not, it's just a job. Well, be proud of the output that you have. Let's put quality in front of quality. And especially when it comes time to investment, and especially in these younger generation of company owners and founders.
Thank you very much Martin for having me. It was a pleasure talking to you, and namaste to all your
Thank you
audience.
very much. Thank you very much. Abhishek, we could go on for hours and hours talking about this. I think it's just a lovely subject. So I truly appreciate your time and commitment.
Thank you.
With that being said, my name is Martin Hunter. I am the host of What CEOs Talk About, where we translate vision into frontline operations. Please like, subscribe, and click the notification bell so that you know when the next episode comes out. With that being said, thank you very much and enjoy the rest of your day.
Thanks for tuning in to What CEOs Talk About. Make sure to click subscribe to get notified about future episodes, or check us out at www.whatceostalkabout.com.